Like and subscribe and click the bell icon to get new video updates.
As set to slip as stocks fall globally as US Fed hints at 50 basis point rate hikes if inflation persists. Stocks are sliding globally, including in Australia, as the US Federal Reserve hints at steeper rates hikes as soon as the war in Ukraine eases. Wall Street ended in the red overnight, with losses as large as 2.2% on the Nasdaq. Apple, Microsoft, Amazon and Tesla contributed to the tech-heavy sector's decline. European markets also dipped. Germany's DAX lost 1.9%. At 3 p.m. EST, the AS 200 was down 0.6% to 7,449 points. The bottom-performing stocks were Wistec and Novonix, down 5.78% and 5.6% respectively. Magellan was the top performer, with a gain of 12%. Miners, including Iluka and Perseus, were also gaining as commodity prices moved overnight. 7 of the 11 major sectors were down, including energy, financial and tech. Meanwhile, Westpac has been fined $1.5 million for mis-selling consumer credit insurance, CCI, on its credit cards and certain sorts of loans. CCI is often dubbed junk insurance, and it has been an endemic problem in the financial sector for years. It is down 0.7%, in line with the broader sell-off within the banking sector. US may lift rates further than expected. The Fed's latest meeting note showed many members of it refrained from voting for a bigger rate hike at the March meeting only because of Russia's invasion of Ukraine. The US economy is battling rising inflation and more rate hikes are seen as imminent to tackle this, with many analysts expecting a 0.5% rise, not the more typical 0.25%. Many members viewed one or more 50 BP rate hikes could be appropriate at future meetings if high inflation persists, CBA noted this morning. We expect the FOMC to increase the funds rate by 50 BP in May and June. The Australian economy is also battling price hikes. However, the Reserve Bank only this week decided to keep rates at historical lows for a while longer. USD fluctuated modestly as market participants digested the FOMC's March meeting minutes, CBA's analyst said. AUD USD dropped below its pre-RBA level and is trading near 0.7510. Weaker oil and equity prices weighed on AUD. Meanwhile, there are jitters about China's economy, with the entire city of Shanghai under another COVID lockdown. That is as the major financial hub battles 13,000 cases of the virus daily. China's COVID-zero policy leaves Shanghai still locked down with cases rising still, and nerves fraying about further spreads and more sweeping lockdowns, ONDA analyst Jeffrey Halley said in a briefing note. China's cakes and non-manufacturing PMI slumped to 42.0 in March from 50.1 in February. COVID-zero restrictions and fears, along with downstream impacts from Eastern Europe, appear to be sapping consumer confidence. Posted 8 hours ago, updated 1 hour ago.